Welcome back to the Value Investors Club. I'm your host, Simon Wunderlich. Let's get right into it with VIC readings, the format where we look at the best of the best value investment recommendations by the best of the best value investors out there. Today we have Moonpig Group, PLC, ticker is Moon. I think it is out of London, or the LN stands for something else. Price at the point of finding is $165. It is a short recommendation. They say short this stock. Let's see if we will. And please write down in the comments below if you already bought the stock or shorted the stock, or why and why not. Description, background. Moonpig is a UK-based e-commerce retailer of customizable online greeting cards and other gifts. Moonpig was launched in the dot-com bubble in 1999, but managed to survive and gain scale over time. It was acquired by personalized photo/gift platform Photobox for 120 million Great Britain pounds in 2011. Itself backed by various PE/VC funds. In 2015, Photobox was acquired by PE firm Exponent and Electra for 40 million Great Britain pounds. In 2018, Moonpig, Photobox, acquired Dutch rival Greets. In 2019, Moonpig was again separated from the larger Photobox, which was still loss-making. The pandemic was a huge tailwind for Moonpig's digital business. Revenue surged over 100% to 368 million in FY 4th 21. The owner seized this opportunity to seek liquidity. Moon completed an opportunistic IPO in February 2021 at 350 Great Britain pounds, with secondary shares accounting for 96% of the upsized offering. While the stock is down over 50% since, there may still be significant downside opportunity. COVID beneficiary. Moonpig's revenue was supercharged by the pandemic and lockdowns, with revenue and adjusted EBITDA more than doubling. Revenue subsequently declined 70% in FY 2022, April, and margins contracted, albeit slightly. However, results may still have ways to go to fully normalize. Revenue was still 75% on a 2-year basis. Pandemic-era customers acquired are likely to prove low value, and approximately 60% of Moonpig's website traffic comes from search, paid plus organic. The top referral sites are coupon/voucher sites. Discounting is rife, and there's no moat from competition. M&A, buying revenue. In July 2022, Moon completed the the 124 million Great Britain pounds acquisition of experience gifting platform Buy a Gift. Buy a Gift was expected to bring PF FY 2022 revenue base of 44 million Great Britain pounds and adjusted EBITDA of 40 million Great Britain pounds in FY 2022. The acquisition looks suspiciously like buying revenue near a market peak, or at least strategy drift, whereas Moon historically talked up the synergies of cross-selling physical gifts to card purchasers. The Buy a Gift acquisition was step change into a $8 billion UK Great Britain pound standalone experience gifting market. Moon cites Buy a Gift's historical 10-year revenue CAGR at 10%, which for a business of its size does not appear especially noteworthy and is below the company's medium-term target despite the far lower base. In reality, it's difficult to see the business appeal of Buy a Gift and sister brand Red Letter Days, which look a lot like high-end Groupon sites, but with more limited use cases. Search drives almost 60% of traffic, including 26% from paid search. Moon touts unrivaling sourcing, but 34% of the product is hotel-related and little to none looks particularly proprietary. The acquisition also significantly increased Moon's leverage. The company's estimated PF leverage would be 2.3x at the close of FY 2022, April 30th, and jumping another half turn at first half year of 23 due to seasonal working capital build. Web traffic trends and macro headwinds. Moonpig web traffic is running down by 15% year over year since mid-year. Buyagift.co.uk website traffic turned flat negative beginning in June 2022. With inflation running at double digits in the UK heading into the holiday season, discretionary consumer spending faces obvious headwinds. Competition. The business is the number one in UK and NL, but the business also has low barriers to entry and there's plenty of competition. Funkypigeon.com, personalized cards, gifts, and flowers. Thoughtful.com, Papier.com, stationery and e-gift cards. Touchnote, app-based digital and physical cards. Larger US international players, Paperless Post, Jackie Lawson, Evite, etc. Many mature flowers and e-commerce gift competitors. Outlook/Catalyst. Moonpig announces first half year FY 4th 23 results on December 7th. Moonpig has forecasted 350 million Great Britain pounds in revenue in FY 2023, including the addition of Buy a Gift from July, implying a flattish growth ex Buy a Gift. The company affirmed guidance in its trading update on September 20, but also emphasized results are expected to revert to pre-COVID seasonality, with the holiday period key 58 to 60% of sales expected in the second half and margins weighted to second half. Moon also suggested they have prioritized greeting card sales, which appears to be a reversal from recent talking points focused on growing the gift attach rate. Consensus is only modestly lower at 344 million Great Britain pounds in FY 2023 and calls for another plus 14% growth in FY 2024, roughly in line with the company's mid-teens medium-term target. Consensus also calls for margin expansion despite the potential sales deleveraging organic in FY 23. Together, these figures appear to leave plenty of room for missed 2023-2024 results, which may not be fully priced in. Potential selling selling pressure. Exponent is still the largest shareholder with 41 million shares or 12%, and other legacy PE investors still hold a few percent more. They completed a 27 share secondary in May at 250 Great Britain pounds, a percent discount. Sooner or later, another discount in secondary is possible. Catalyst, a lower 2023 and medium grown targets, increasing leverage. Thank you very much for tuning in. See you next time, and please write in the comments if you will buy not, what you